Dividend growth matters, and these companies are among the best in this regard. These dividend stocks are a lock for income investors. Coca-Cola. Coca-Cola is thriving in an inflationary environment. Leggett and Platt. Leggett and Platt stock is trading near a decade low, despite solid sales growth. Universal Corp. Universal's income opportunity is too tempting to pass up. Let's dive in. Here are the 3 dividend champions that have raised their payouts every year since 2000 or earlier. Welcome to Timely Investment Research. Stocks that pay a continuously growing dividend are often known as dividend champions. On this list of dividend champions I'll be looking at, there's an assortment of companies that have impressively increased their distributions on an annual basis for the last 25 years or more. If these companies sound like dependable investments, that's because they are. Investors seeking a steady passive income stream ought to consider the stocks on this list. Many of these companies are household names that have been around for generations, and there's also a fair percentage of flat-out boring industrial stocks. While these businesses may not be trendy, they provide consistent returns, which is the most important consideration for any long-term investor at the end of the day. Number 1. Coca-Cola. Coca-Cola is perpetually on most lists of stocks to buy for good reason. It remains one of the most recognizable brands globally, continues to grow, is very reliable, and pays investors a reliable dividend to own its shares. Coca-Cola has been performing well, despite inflationary concerns that have hurt many of its consumer discretionary peers. Consumers continue to spend on affordable luxuries, such as snacks. Fortunately, this sentiment has also filtered through to include soft drinks. So long as this environment continues, and I don't see why it would come to an end, Coca-Cola remains a top dividend stock for long-term investors to buy right now. Additionally, Coca-Cola's financials reflect strong past performance and the likelihood of continued strength moving forward. Sales increased by 6% to $12 billion in the second quarter. Earnings per share jumped by 34% to 59 cents, with the company's cash flow seeing a similar boost higher. Indeed, it's important to consider the fact that Coca-Cola managed to do so well even though volumes were flat. Thus, it's clear that the company is able to push higher prices onto consumers while also absorbing higher costs and increasing earnings. This sort of pricing power is another reason to love Coca-Cola stock as a dividend holding for the long term. Number 2. Leggett and Platt. Leggett and Platt is a very diversified firm within the industrial sector. The company provides bedding, furniture, hydraulic cylinders, aerospace tubing, and flooring textiles, and has been in business for more than 140 years. Despite its age, Leggett and Platt continues to grow its sales at an impressive 8% clip, at least during its second quarter. However, the news isn't all good regarding Leggett and Platt. The company's earnings per share did fall by 30 cents to 40 cents in second quarter on a year-over-year basis. Further, the firm lowered its sales and earnings guidance for the remainder of 2023. That logically begs the question of why investors should then consider Leggett and Platt shares. The answer lies in the company's dividend, which yields 6.1% currently. This yield has been boosted by a share price which is at a near-decade low. Thus, with Leggett projected to grow this year and next, I view this low stock price as a strong entry point. This is a stock to buy for the income now and sell later for the capital appreciation upside. Number 3. Universal Corp. A Universal Corp stock is very similar to Leggett and Platt. Both firms offer a dividend yielding more than 6%, and both firms are trading at prices similar to where they were 10 years ago. Universal is also growing. In fact, Universal's sales increased by 20% to $517.7 million in the second quarter. The company sells tobacco leaf and plant-based ingredients for use in the manufacturing of human and pet food. Tobacco sales accounted for $444 million of Universal's $517.07 in second quarter sales, which grew a whopping 28% during the period. The issue with Universal Corp is that although it has a large sales base, it struggles to eke out profits. The company's net income fell from $6.15 million to negative $2.06 million, despite its solid top-line increase. Notably, the single analyst covering the stock believes Universal Corp shares are worth $59 apiece. They currently trade for $49. The company's dividend hasn't been reduced since 1971, and the payout ratio is healthy. That's the right combination for investors seeking a long-term dividend stock to buy right now. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.